Hey guys, AKIL'S here. Welcome back to another trading video. I'm going to give you a quick breakdown of the dollar index today. So sticking strictly to the technicals, we've had a big sell-off today, and not just today, the last 3 days here on the Dixie. And I'm going to show you how we can look at this as both a buying and a selling opportunity. So a little bit of a longer term outlook here. So we'll start on the buy side. The first thing that we have here is a completed advanced pattern formation called the Cypher Pattern, right? I'm going to draw this on quickly because I'd like to make this video short and sweet and get it to you so you have time to kind of see if this is something that is up your alley or not. But with the Cypher Pattern, we are looking at this. We're looking at a swing low to swing high being our X to A, a retracement right here being our A to B, an extension up being our B to C, and then a move down to this 786 as being the D completion for our cipher. Now, the 786 is the official completion point, but the completion zone actually goes all the way from our 786 down to the start of our X leg. So anywhere in this zone, or if price is anywhere in this zone, it means that the cipher is completed. So that can be a buy right now at market if you'd like. Something else that we have here is a previous level of structure support, right? If I just drag this line to the left, you see it pretty much takes into account this last little pullback here, which is a previous level of structure support. So if you are a trader that uses support and resistance and you're looking for a stopping point, what I would look for here is I would hope for the market to continue to aggressively dive down to this level. Maybe you get some type of pin bar reversal, so something like this where you get a candle that probes through this area and then we get a higher high, higher close. That would be a good sign for a potential buy. Or maybe we come down and we just do like some double bottom action where price action comes down here, we spike up, we come back down to retest, we hold, and then we continue up like that. We'll never know what the market is going to give, but those are just a few ideas of some clues that you can look for. But I would look for those at those levels. And then there are three places where I would expect price action to bounce to if we were to get that type of sign. The first level, and I'm going to shrink this. I'm going to delete this just to have some more real estate. The first level would be this. Right in here, the B leg of that Cypher Pattern, our next most recent level of previous structure support that now acts as resistance. A second level would be a little bit higher right here, about 106s. You can see the little new structure low right here before we bounce up. And then the third level will be right up at this zone right here around 107.60s, 107.50s, or actually it's a little bit lower than that, 107.20s up to about 107.60s, right? So level 3, level 2, level 1, as far as your expectations if we were to get a bounce here. Now, this level is important, the lower level I'm referring to, because this is going to be a decision point where the market is going to make a decision, right? This is the beauty of support and resistance, right? If you can correctly identify support and resistance and correctly know how to read the market and interpret what it does based off what it does at that level, I need to get more words in my arsenal, you can make some pretty good predictions. So a hold of this level, again, would allow me to expect that price is going to bounce up. But if we violate that level, meaning if we break and close below it, I would predict that price action is likely to continue lower. And this is kind of a staple rule that we have when we teach our traders about technical analysis, right? A violation means this, a hold means that, and that sets up our next prediction. So if we were to violate this level, now the question is, well, where would we go lower to? Or let me backtrack on that. If we violate that level, then it allows me to predict that price is likely to continue lower. If price is likely to continue lower, then the next question I want to ask myself is, where are we likely to continue lower to? And for me, it would be this level right here, right? You can see these little two guys right here, these little two bounces off resistance, right? I would expect price to go to that level, maybe a little bit higher just to take the even handle into account, 102s. If you're looking for an even lower level, then you can look down at the lowest level here, about 128s, around that level as well. So a couple options for you guys. We have the Cypher. I'll draw that back on right now. The Cypher at market. And of course, you can look for a reason for entry as long as we are in that zone. You have the structure-based trade where you can look for price action to test this level of structure and then look for clues. Very important. I wouldn't just buy it around there. If you're doing the structure-based thing, look for clues that the market is more likely to do what you think it's going to do. And if you're looking for shorts, see if we have a violation of that level. And if so, look for a push down. So I hope you guys enjoyed the video. If you have any questions or comments, leave them below. If you want to share your ideas as well, leave them below. And also, if you ever have a chart that you want me to break down, right, I always take requests with the Trading Coach podcast. I'll do the same thing here with technical analysis. Just leave it in the comment section below. And if I have the time, I will gladly do a video for you. All right, take care.
I want to be the best in the game, invest in my name, check no restraints, I'm obsessed with the pain, I ingest, I retain, assess and I change, possessed by the thought I'll be free one day from society's restraints, money, clout and fame, mud, disease, a plague, we all love to hate, have to play the game, have to make a name, all our insecurities are on. This is